For Cal-Maine Foods, the nation's largest egg producer, 2022 was a bit of an eggstravaganza.
What came first, the chicken or the egg? Well, the egg came first in this story. Cal-Maine Foods, the egg company, shares are soaring this year, up 64%.
While you paid $4.30 on average in December 2022 for a dozen eggs, compared to $1.80 in 2021, Cal-Maine reported a nearly 32% increase in revenue in 2022 from 2021.
I think it's a testament to the fact that they haven't had any outbreaks, how good they've been at biosecurity in their facilities. This is a very experienced, very deep management team that's been in this industry for a long time.
Eggs are an about $10 billion industry, with nearly 13% growth annually in profit from 2017 to 2022. But it's also a volatile one that's sensitive to market changes or environmental factors. And of course, it's not one without controversy.
Each bird is given less space than the dimensions of an iPad on which to live her entire life. And so they have to eat, sleep, defecate all in the same area, and they're denied virtually everything that's natural to them.
Everyone tries to make money, but it's a very low margin industry.
There are 373 million laying hens around the United States as of January 2023. After hens lay eggs at a farm, they get graded by the United States Department of Agriculture and put into cartons, sold to retailers, and then purchased by you, the consumer.
The egg industry has been a relatively low margin, low return business, given that the producers are responsible for growing the hens, keeping them fed. They're exposed to things like corn and soybean costs. And so that's created a pretty volatile margin structure and had relatively low margins over time.
More than 9 billion eggs were produced in the United States in December 2022. More than half of the eggs produced are typically table eggs, white eggs produced by battery chickens. About 8% are brown, 19% produced by cage-free chickens, about 6% by organic free-range, and nearly 14% are hatching eggs. Cal-Maine Foods, the only public egg producer, holds nearly 17% of market share. Like some of the other larger companies, it operates farms, processing plants, hatcheries, feed mills, warehouses, offices, and other properties around the country. The second largest producer is Rose Acre Farms with about 7%. Then there's Versova Holdings and Hillandale Farms with just more than 5% each, and Michael Foods with 3.5%.
Eggs are a vertically integrated business. So the egg producers control from the time the chick is hatched through the end of when it can no longer lay eggs, right? They control that whole process. Once an egg is laid, within 2 to 3 days, it's on the shelf at your grocery store.
Cal-Maine Foods, headquartered in Ridgeland, Mississippi, was founded in 1957. It has one operating segment, which is the production, grading, packaging, marketing, and distribution of shell eggs. Integrated operations include hatching chicks, growing and maintaining flocks of pullets, layers, and breeders, manufacturing feed, and producing, processing, packaging, and distributing shell eggs. As of May 2022, the company had more than 42 million layers, or hens that lay eggs, and 11.5 million pullets and breeders.
Egg prices are very dynamic. They move up and down every single day. While Cal-Maine is probably the best operator in its space and certainly has a great management team, it's been a difficult stock because it's so volatile and so cyclical.
A volatile stock is driven by several factors, company performance being one. In 2022, Cal-Maine revenue was at its highest since 2016. After a steep drop in 2017, among other factors as a result of the avian flu outbreak in 2015, revenue increased in 2018 before beginning a steady decline through the height of the pandemic. Between 2021 and 2022, revenue increased from $1.3 to $1.8 billion, a 40% increase.
They're market takers, right? They will take what the market is dictating.
This is Angel Rubio, a senior analyst at Urner Barry, a market research firm specializing in the wholesale food industry.
Prices went up because of what happened with avian influenza. So if your farm wasn't affected by avian influenza, you're probably going to do very well because the market is dictating higher prices overall.
Cal-Maine said in its annual report that as of July 2022, no bird flu had been detected at any of its facilities as a result of the latest outbreak. Surging egg prices helped drive Cal-Maine's stock up almost 50% in 2022, even as the S&P 500 fell 19%.
There's a massive wave of bird flu that's taking over farms and wildlife centers across the country. Millions and millions of infected birds destroyed so far.
2022 was specifically an outlier year. Probably this was the highest price on record at the wholesale level and at the consumer level as well.
More than 58 million birds have died since the beginning of 2022 as a result of the deadliest outbreak of avian flu in U.S. history. The flu is lethal and kills 90 to 100% of chickens, often within 48 hours. As of January 2023, the number of laying hens in the U.S. is down 5% from the same time in 2021. While the U.S. also faced an outbreak in 2015, this time, it's different.
In 2015, you had the outbreak for a couple of months, but the outbreaks began after Easter. You didn't have corn prices at above $5. You didn't have the war in Ukraine. You didn't have inflationary pressures. The economy was expanding. In 2022, it's still expanding, but there were the prospects of a potential recession. Components are very different in 2022. In addition to the fact that we have multiple outbreaks throughout the year, so there hasn't even been a seasonal recovery overall.
The U.S. has lost around 43 million egg-laying hens, about 10 or more percent of the population, due to the disease itself or depopulation since the outbreak began in February 2022.
It's very significant. When for every 1% of egg layers lost, prices would move about 6 to 7%. In some cases, even 8%, but on average, it's about 6%. This time, for every 1% layer that we lost, prices went up about 15%. So that's significant when we're talking about supply shocks between 2022 and 2015.
New regulations have gone into effect too. In 2016, Massachusetts voted Question 3, also known as an Act to Prevent Cruelty to Farm Animals, into law, the strongest farm animal protection law in the U.S. at the time. It made it illegal for Massachusetts hens to be confined in such a way that prevents the animal from lying down, standing up, fully extending its limbs, or turning around freely.
The majority of hens on industrial egg farms, they're confined to these cages called battery cages. If you look at a sheet of paper, they have less space than that on which to live their entire life.
In 2018, California voters approved a similar law to the one in Massachusetts, Proposition 12, the Farm Animal Confinement Initiative. It requires that covered animals, including egg-laying hens, be housed in confinement systems that comply with specific minimum standards for freedom of movement, cage-free design, and minimum floor space. Both Question 3 and Proposition 12 went into effect in January 2022.
Those are the only two states that require this. But there are moves by many other states to eventually get to that.
The Humane Society of the United States led the campaigns to ban the use of cages in 11 states. In Ohio, not all cages, but battery cages. 8 of those states also banned the sale of eggs from cage facilities.
They have to get it from farms that are cage-free, which is driving the price up. So it's a disruption overall in the market, and that's causing disruption in prices, but not necessarily on availability. But if you look at the prices to the consumer, for instance, for cage-free and conventional eggs, their spread between them is the smallest it has been because they just need those eggs, and those states that mandate those requirements are pulling the cage-free eggs into those markets, which is causing those prices to move up.
To give time for producers to modify their operations, these laws are expected to go into effect in the next few years.
The industry needs to convert a lot of its existing capacity from caged eggs to cage-free eggs, and that's expensive and requires a lot of time and effort.
In fiscal 2021, Cal-Maine announced its board of directors approved several new capital projects estimated to cost more than $100 million to expand the company's cage-free egg production capabilities. Cal-Maine said it plans to fund these projects through available cash on hand, investments, and operating cash flow.
They are converting their facilities to cage-free because they know there are companies that want to buy them, and they know that consumers want them as well.
A 2022 poll shows that 80% of all likely voters in the U.S. at least somewhat support Proposition 12. Retailers have committed to only selling cage-free eggs as well, including Walmart, which has said it will do so by 2025.
The industry has an estimate that to convert from conventional to cage-free, it's roughly $45 a bird, and that number's even stale relative to kind of what's happened with costs in the past few years, so call it closer to $50 or $55 per bird. So, on a base of 325 million hens, you're converting a big percentage. You're talking from an industry perspective, like billions of dollars.
Meanwhile, in California, a state where Proposition 12 went into effect in 2022, the wholesale price increase from 2020 is only 8 cents per dozen. High feed prices have also significantly affected margins, as layers mostly eat corn.
Prices were already high from the end of 2020. Once the war in Ukraine hit, it exacerbated this problem by not letting prices correct downward as we produce corn here in the US. Because remember, these egg-laying facilities are in the Corn Belt because that's where corn is, and it's a massive ingredient for feed. And it's a massive cost of production of the overall industry. Oil prices, energy prices will be impacted by that. You have to be running the barns, and they're energy intensive as well. Macroeconomic indicators in the case of inflation the same way.
To put it simply, the industry is volatile. Prices react to what's happening in the world. The avian flu, inflation, regulation changes, the war in Ukraine, tensions between the US and China, the coronavirus pandemic, supply chain issues, and the cost of feed, labor, fuel, and packaging all impact the price of your egg sandwich and who's making the most money off of your morning treat. In a statement to CNBC, Cal-Maine Foods said, "Throughout our history, we've worked to build a business model that can deal effectively with the industry's inherent volatility. We strive to create a culture of sustainability while creating value for customers, shareholders, team members, and communities." In the next few years, the industry is expected to experience 1.2% revenue growth due to steady upticks in egg prices, per capita egg consumption, and demand from chicken egg production. Economic or environmental factors could change the outlook, and there's of course the question of how demand will shift based on changes in regulations.
To the extent that there are now a bunch of conventional white eggs that are kind of floating around the market, do those flood into other states that aren't, allowing conventional eggs and kind of depress the pricing? I think it's something we don't know yet at this point, but it's definitely a risk that we're watching very closely.
And with the avian flu wiping out more than 58 million birds, everyone is affected, from the producer all the way to the consumer.
I think about my local grocery store. Knowing what I know about the wholesale market, being at that $5.50 plus number that it was in December, they took egg prices up some, but they didn't take it up to that full amount. So the grocers were actually losing money on eggs. They're playing some catch up on that now. But I think on the reverse, they're going to try and restore those margins, at least for a little bit, on the way back down. So they won't take the pricing down as quickly as it went up.
It's been an eventful couple of years, but experts aren't worried about the industry's future.
We have been in transition, so we don't know what's going to be on the other side, but it's not terrible, right? We're going to be just fine.